Luigi, when we go back to the Italian banking problem, so the markets expect a resolution a lot quicker than probably what the EU needs to resolve it. But is this a bigger issue than Brexit? Could this really be the final nail in the coffin of the EU if it's not solved in the right way?
I think there is a risk. I think that the most likely scenario is that things will work out. But I think there is a risk that if this doesn't work out properly, eventually will create major disruption in Italy, and through that, probably in the entire European Union.
So you wrote an article for Il Sole 24 Ore, basically saying, well, you know, this is what the Atlante Fund, which was considered too small by the markets, but still defended with teeth and grind by the government. You would have structured it differently.
What I wrote is that I look at the only one big experience we have of a bad bank in Italy, which is the Banco di Napoli. The Banco di Napoli went in a deep crisis in 1996. And at the time, 9 billion euro of loans were separated in an entity called SGA. And over 20 years, this SGA has recovered most of actually that money. The problem is, and many people use this as an example, that we can get out of this crisis just waiting and be patient. However, if you look at how long it took and how much it cost to get back that money with reasonable interest rate, places the value of non-performing loan around sort of 22, 23 cents on the dollar, which is much lower than what Atlante has evaluated them, and will put the Italian banking system in a much weaker situation than people perceive it to be.
And David, you know this as well. I mean, this is a rough number from the CFA Institute, but within my reading, at the bottom is 18% is the valuation, and maybe it migrates up into the 20s, right where your 22% is. I mean, this mystery of markdowns to me isn't all that much of a history. When you blend in all the history of markdowns, we get to that number, don't we, David?
Yeah, and then the problem with the asset management company solution, which has been tried in other countries, the biggest problem with that, when you actually move these things off your balance sheet,
the bad bank,
you can basically move it at whichever valuation to basically render the good bank solvent, so to speak. So I think there is a lack of transparency in that transfer process as well. But I think the bigger issue here as far as European banks is the fact that, you know what, we've seen a massive increase in correlation between European bank stocks this year and with German government bond yields. And that's telling you the market for the first time is starting to question the effectiveness of further monetary easing, because all monetary easing is doing, driving down yields, is weakening the banks. And in Europe, this is a huge problem because of the disproportionate role that European banks play.
And I would point out that the economist Francine Lacroix this morning brought up 5-year gilts, which is doing the same thing.
Yeah, and actually, David, I want to go back to your point that is it even worse for European banks that the ECB has gone into negative territory than it is for Japanese banks?
Absolutely. I think if you look at actually, you know, because the point here is that Europe, you know, unlike the US, for example, or even the UK for that matter, is much more dependent on banks as basically lenders. So from that point of view, you're weakening the banks, and then the banks are reluctant to recapitalize. What you're going to end up with is basically credit crunch, which I think is what you're seeing in Europe.
But the credit crunch goes, Luigi, to the heart of the matter. Everybody knows this. Go out and raise more money and dilute equity shareholders. What is your Italy waiting for? We know that.
First of all, equity holders don't want to be diluted.
We know that.
We've seen that in the United States during the crisis. Everybody was waiting. So the question is the government willing to step in and force this recapitalization one way or another? And the answer is I don't think so. I've been actually trying to advocate a move in this direction, but there doesn't seem to be political will at this moment to do so.